You just check your credit score. 780. Excellent. Your chest swells a little. You screenshot it. You almost text it to your mom. Look at me. I'm responsible. I'm winning. You worked so hard for this. Every bill paid on time. Every balance kept under 30%. You did everything the system told you to do. But wait. Close the credit app. Now open your bank account. Go ahead. I'll wait. $283. That's what's actually there. You've got $28,000 spread across 3 credit cards. You're making minimum payments plus a little extra. Your 401k has $940 in it. You're 32 years old. And 5 minutes ago you felt proud of that 780 credit score. Your credit score just lied to you. And worse, you believed it. If you ever felt proud of your credit score while your bank account is screaming at you, don't click away because what I'm about to show you is going to make you angry. My name is Mike and I make videos about how money actually works in real life. Quick disclaimer, I'm not a financial advisor. This isn't financial advice. I'm just sharing what I've learned about what credit scores actually measure versus what they want you to think they measure. Talk to a professional about your money. Here's what just happened. You got dopamine from a number. A 3-digit number gave you a feeling of accomplishment. Your brain lit up the same way it does when you level up in a video game. That's not an accident. Credit scores are deliberately designed to feel like achievements. Excellent. Very good. Good. Fair. Poor. They're ranks. Tiers. Levels. Banks spent millions studying game design psychology to make you chase this number. And it worked. You're hooked. But there's a catch. While you're playing their game, leveling up your credit score, they're playing a different game. They're extracting wealth from you, and you're thanking them for it. The villain here isn't just the credit score. It's the entire system that convinced you the score equals success. Let me be crystal clear about what your credit score actually measures. It measures one thing, how profitable you are to lenders. That's it. Not how wealthy you are. Not how financially stable you are. Not how smart you are with money. How profitable you are to banks. A high credit score means you're an excellent borrower. You borrow money. You pay it back on time. You pay interest. You're a profit center. Banks love you. But here's what makes me mad. Being a good borrower is the exact opposite of being wealthy. Wealthy people don't borrow money. They lend it. They earn interest. They don't pay it. Let me break down what actually goes into that 780 score you're so proud of. Payment history is 35%. Are you paying your bills on time? Credit utilization is 30%. How much of your available credit are you using? Length of credit history is 15%. How long have you been borrowing? Credit mix is 10%. Do you have different types of debt? New credit is 10%. Are you opening new accounts? Now stop. Read that again. Notice what's completely absent. Your savings, your investments, your net worth, your income, your actual money. None of that matters. 0% of your credit score cares about wealth. You could have $2 million in the bank and a 620 score. You could have negative $50,000 net worth and an 850 score. The score is not measuring financial health. It's measuring debt management. And the best debt management is no debt. But no debt gives you no score. Pause this video right now. Open your banking app. Look at your credit score. Now look at your net worth. Your assets minus your liabilities. What's the actual number? Is it going up while your score goes up? Or are they moving in opposite directions? Comment below with just 2 numbers. Your score and your net worth. Let's see the gap. Let me show you 2 people who will change how you see this forever. Person A and Person B. Both 30 years old. Both make $70,000 per year. Exact same income. Person A is obsessed with their credit score. Checks it every week on Credit Karma. Gets notifications when it changes. Celebrates when it goes up. Panics when it drops. Person A has 5 credit cards because they read that credit mix matters. They keep small balances on each one because they read that utilization between 10% and 30% is optimal. They finance a $32,000 car at 6.9% interest because they read that installment loans boost your score. They are paying minimums on $18,000 in student loans because they read that paying them off might hurt their credit age. Person A has an 820 credit score. Top 1%. Exceptional. Banks send them pre-approved offers weekly. Person A feels successful. But here's what Person A actually has. Credit card debt, $8,400 at 23% average interest. Car loan, $28,000 remaining at 6.9%. Student loans, $18,000 at 5.5%. Total debt, $54,400. Checking account, $1,100. Savings, $800. 401k, $3,200. Total assets, $5,100. Net worth, negative $49,300. Person A is almost $50,000 in the hole, but they have an 820 credit score, so they think they are crushing it. Person B doesn't give a single damn about their credit score, hasn't checked it in 2 years, doesn't know what Credit Karma is, has one credit card they got in college, uses it for gas, pays it off every single month, drives a 2015 Honda Civic they bought for $12,000 cash 3 years ago, paid off their $18,000 in student loans in 22 months by living with roommates and throwing every dollar at it. Person B has a 668 credit score, just barely good according to the tiers. Banks don't send them fancy offers. Credit Karma would tell them they have room for improvement. But here's what Person B actually has. Credit card debt, $0. Car loan, $0. Student loans, $0. Total debt, $0. Checking, $8,000. Savings, $22,000. 401k, $31,000. Car value, $9,000. Total assets, $70,000. Net worth, positive $70,000. Person B is worth $70,000. Person A is negative $50,000. The difference between them is $119,300. That's not a typo. Person B is ahead by over $100,000. But Person A has a better credit score, by 152 points. The credit score is lying. Which person do you want to be? Be honest in the comments. Are you Person A right now? Because I was Person A for 7 years of my life. Now here's where the psychology gets really dark. Credit scores are gamified on purpose. Banks studied video game addiction. They studied slot machines. They studied dopamine loops. And they built the credit score system using the exact same mechanisms. You check your score. It went up 12 points. Dopamine hit. You feel accomplished. You want to check again. It's variable reward. Sometimes it goes up. Sometimes it stays the same. Sometimes it drops for no clear reason. That uncertainty keeps you hooked. You keep checking. You keep chasing. You keep trying to optimize. And every single optimization they recommend involves borrowing more money. Keep balances between 10% and 30% utilization. Translation: stay in debt. Don't pay off loans too fast. Translation: keep paying interest. Open new types of credit. Translation: borrow more. The entire optimization guide is a debt trap disguised as advice. But there's a catch nobody talks about. The better your credit score, the more dangerous you are to yourself. Here's why. An 820 credit score qualifies you for a $600,000 mortgage. A 680 score qualifies you for maybe $400,000. The bank looks at Person A with their 820 and says, wow, excellent credit, we can lend you more. They approve Person A for a $550,000 house. Monthly payment, including taxes and insurance, is $4,200. Person A is now house poor. They make $70,000 a year. After taxes, that's about $52,000. Their mortgage alone is $50,400 per year. They have $1,600 for the entire year for everything else. They are trapped, but they got that house because of their excellent credit score. Person B with a 680 score gets approved for $350,000. They buy a $320,000 house. Their monthly payment is $2,400. That's $28,800 per year. They have $23,200 left over after housing. They are investing $1,500 per month. In 10 years, that's $310,000. Person A has a house and no money. Person B has a house and $350,000 invested. Same income. The difference is a credit score trap Person A into a bigger loan. Stop right now and think about your last major purchase. Did you ask, can I afford this, or will I get approved for this? If you asked about approval, the credit score is running your life. Here's what nobody tells you about credit score ranges. You need good credit for exactly two things: a mortgage and maybe insurance rates. That's it. And good credit is 680, not 780, not 820, just 680. The difference between a 680 and an 820 on a mortgage? About 0.25% on the interest rate. On a $400,000 mortgage, that's about $60 per month. Over 30 years, that's $21,600. Sounds like a lot, right? But getting from 680 to 820 requires you to stay in debt. Keep balances. Keep loans open. Keep playing the game. The debt you maintain to boost your score from 680 to 820 costs you way more than $21,600. Way more. You're sacrificing tens of thousands in interest payments to save $20,000 over 30 years. The math doesn't work. You're being tricked. Let me show you the choice you actually have. You can optimize for credit score or you can optimize for wealth. You cannot do both. Here's how you optimize for credit score. Keep 3 to 5 credit cards open. Use them monthly. Keep balances between 10% and 30% of limits. Never pay them to zero because that might hurt utilization. Finance your cards because installment loans boost your score. Keep student loans on the minimum payment plan because paying them off reduces your credit age. Never close old accounts even if you don't use them. Do all this and you will have excellent credit. You'll also be in debt forever. Now here's how you optimize for wealth. Get one credit card. Pay it off completely every single month. Zero balance. Zero interest. Buy cars in cash or pay them off in under 2 years. Obliterate student loans as fast as possible. Close accounts you don't use. Build an emergency fund. Invest aggressively in index funds. Max out retirement accounts. Your credit score will probably be mediocre. Maybe 680. Maybe 700. But you'll actually have money. You'll have assets. You'll have wealth. You have to choose. And the score is designed to make you choose wrong. Are you optimizing for a number, optimizing for your life? Comment your honest answer. No judgment. Here's the bottom line that I need you to understand. A credit score measures how profitable you are to banks. Period. It is not a measure of success. It is not a measure of wealth. It is not a measure of intelligence. It's a measure of how much interest you're paying. That's it. The entire system is designed to keep you chasing a number while banks extract wealth from you. You can have an 850 score and be completely broke. You can have a 620 score and be a millionaire. The score means nothing about your actual financial position, nothing about your savings, nothing about your investments, nothing about your freedom. It only tells you how good you are at managing debt. And the best way to manage debt is to not have it. But if you don't have debt, the system tells you your score is bad. See the trap? They build a system where doing the right thing tanks your score and doing the wrong thing boosts it. Here's what you need to do starting today. Stop checking your credit score every month. Stop getting notifications. Stop letting that number control your financial decisions. Check it once per year to make sure nobody stole your identity. That's it. Second, pay off every credit card in full every single month. No exceptions. No balances. No interest. Third, stop opening credit cards to boost your score. 1 or 2 cards is plenty. You don't need 5. Fourth, attack your car loans and student loans with intensity. Pay them off as fast as possible even if your credit score drops temporarily. Who cares? You're reducing debt. That's real progress. The score will recover. Your wealth won't if you keep paying interest. Fifth, say like your life depends on it because it does. Emergency fund, retirement accounts, index funds, build actual assets. Your credit score might drop while you do this. So what? You're getting richer. That's what matters. Your future self 20 years from now is watching you right this second. They are seeing you chase a credit score or build wealth. And they are begging you to choose wealth. They are telling you they don't care what your credit score was in 2026. They care what your investment accounts were. They care what your net worth was. They care if you were free or trapped. They are telling you that having $500,000 invested feels infinitely better than having an 820 credit score with nothing in the bank. Listen to them. They're literally you. They know. The banks are counting on you to keep worshiping the score. Keep checking it. Keep chasing it. Keep making decisions to boost it. Keep being profitable. But you're not going to do that anymore. Because now you see what the score actually is. It's not success. It's not wealth. It's not freedom. It's a leash. And you're about to take it off. So tell me right now in the comments, what's your credit score and what's your actual net worth? 2 numbers. That's it. Let's see how big the gap is between what we're taught to chase and what actually matters. And if this video just shattered how you think about credit scores, destroy that like button and subscribe because I'm making more videos exposing exactly how the financial system is designed to keep you broke while convincing you you're winning. Let's break out together.